startups are supposed to be built a certain way, exited a certain way. SaaS companies have this playbook or a template, and e-commerce or marketplace companies have a certain way they're built in India. But what I have experienced is that the best of the founders out there kind of find their own path. I'm one of those investors that actually don't mind founders building for the short term and exiting early. It's been a bit of a learning for me, unlearning, I should say, being an investor for a decade, kind of get set into a certain pace, and to unlearn that as a founder now again has been my learning experience, a relearning experience, I should say.
What does an investor mean when they talk about velocity, and why is velocity very important from an investor lens for a founder to have?
Also important to note that the word I chose is velocity and not speed. Too many founders make the mistake of just thinking that momentum is about speed.
There will always be something that will come and hit you in the face that you could have never foreseen. You could have never planned for that. Out of nowhere, one day last year, we received an email from somebody who says, "Don't you think your company logo and ours is very similar?" And then we looked that company up and we're like, shit, yes, everything is similar about your logo and ours. And then we quickly realized that the other company has not trademarked their name. And we're like, we'll just go and trademark it.
It looked really exciting, and I jumped in feet first. And then I realized how cold the water was. Yeah. And I was like, oh shit, I gotta now get used to it. I went to a conference and an event, and some founder asked me, I just jokingly said, yeah, I went mad for 60 days, right? So,
I think I found the perfect trailer for this episode, which is, I was a GP and I went mad for 60 days. It's going to be the hook for a lot of people into the episode. Brij, welcome to the Desi VC podcast.
Thanks for having me.
Extremely excited to have you here. You and I have known each other for a good part of the last 5 years.
Yep.
We've interacted both here in the US and in India. And today we're sitting out here in the studio to talk about two things. Primarily, the 10 years or so that you've spent in venture capital and all the learnings that you've had. And second, and perhaps the most interesting and important journeys is you embarking on becoming a founder again.
Yep.
We've largely seen VCs who spend a lot of time being an operator or have been a founder themselves and then don the investor hat. But you've chosen to go the other way around. You started off as an operator, moved on to become an investor, spent about a decade, and now you are building a company all over again. Talk us through that thought process. What makes you go back and want to be a founder all over again?
Yeah, thanks for having me, and great to be here. I think for me, going back into founder role was very personal in nature. I've spent the first decade of my career being an operator, part of founding teams. I was CS undergrad and built products in the first half of my career. And that is a part that I always found very exciting. And being a VC has been amazing. As an investor, I've worked with some of the best entrepreneurs that the business has, and really seeing that evolution of startups that we invested from seed to Series C and acquisitions as well. As this new wave, especially in AI, started coming about, and it reminded me of the type of products that I'd built in the past and how those products can be transformational in the current wave, and what can be now built that was not possible, let's say, a decade ago. It really sort of brought me back to my early product building days, and I decided that I still have quite a few years left in my career, and this might be a great point to kind of collaborate with friends and build something new and interesting. So that's what brought me back.
That's fantastic. And I kept thinking about how to start this podcast. And obviously, there's your operator role, and there's your investor role, and now there's a founder role that you've played. Maybe we can start from the investor role to begin with. Because as you previously mentioned, there's a lot of experience that you've had investing, supporting companies and seeing them grow.
Yep.
And in fact, before the recording, you were telling me you spent a little bit of time with your portfolio companies here in the Bay Area.
Yep.
What have you learned the most having worked with early stage founders at Brij that you're perhaps more excited about taking into your founder journey?
Yeah. I think the most interesting thing I've realized is that every journey is unique. Every company, every founder, every market. While there is this narrative that we've built that Startups are supposed to be built a certain way, exited a certain way. SaaS companies have this playbook or a template, and e-commerce or marketplace companies have a certain way they're built in India. But what I have experienced is that the best of the founders out there kind of find their own path, and it's as we know, it's never a straight line, right? There are challenges, there are growth opportunities, and it's really about how each of them leverage their journeys, right? I've had founders that have exited early by venture standards, but have had great outcomes for themselves. And there are founders who have been building for a decade plus, have built market-defining products, and that's great as well, right? So I think for me, especially now looking back into that lens of both my operating career and an investor, and now going back, it's really finding what would work for us, what is the journey that I want to be on, and how we can define our own story, right? I think that's probably what I find most exciting, and that's the biggest learning I've had.
And when you were investing in these early stage companies, there's of course a lot of uncertainty in terms of whether these companies are going to be successful or not.
Yeah.
And you're taking somewhat a very similar sentiment to your own company building journey at this point of time.
Yeah.
While you've seen companies succeed and do well as part of the portfolio, you've perhaps also seen companies that have not done really well.
Yeah.
So there are both those parallels, and fortunately, playbooks of what not to do and what to do, that's given you an insight.
Yeah.
How are you building a company in 2025, looking at some of the companies that perhaps have not done really well as part of your portfolio, and largely within the India-US ecosystem as well?
Yeah. I think, obviously lots and lots of different learnings, but if I could really distill it down to one thing that I'm really particular about and how we're going about it now is building that early momentum. I think Paul Graham obviously talks about this a lot on, what's your velocity? Are you moving enough or not? I think that's really important to keep your eye on the ball on how you're moving. It's not just about, revenue growth rates and ARRs and things like that. Momentum obviously can be sped up, can slow down, but, essentially a marathon, right? Like it's exactly to think of it like a marathon. A lot of founders, sort of go into phases where they think it's a sprint and then they run out of steam and, so on and so forth. But like a marathon, consistency is the key, momentum is the key. Having that journey planned out for the long term is one of the key elements to it. And especially as a founder, CEO, it's really important to set that tone, set that vision with your team, and being true to that vision, right? You will have times where, you doubt yourself whether this is the right place, this is the right product. There will be a lot of pivots as well, and there should be. If you are learning from the market, if you are keeping your ear to the ground, there should be changes and pivots. But at the same time, the ball should keep rolling upwards, right? And it's just been a little bit, but I think that is one of the key things. That's what I've noticed with companies that succeeded versus the companies that stagnated or that didn't work out. That momentum really defines the culture that you set, right? The culture between your co-founders, the culture between you and the team and your investors, and what the market sees. And it's been a bit of a learning for me, unlearning, I should say, being an investor for a decade. You kind of get set into a certain pace. And to unlearn that as a founder now again has been my learning experience, a relearning experience, I should say.
You talked about some really interesting things there. You started off with velocity, momentum. You talked about company culture to a certain degree, and then you talked about unlearning. Yeah. So let's unfold all of these things a little bit further. When you talk about velocity, what do you mean? Because a lot of our listeners are also founders who are trying to understand, what does an investor mean when they talk about velocity, and why is velocity very important from an investor lens for a founder to have?
Yeah, and it's also important to note that the word I chose is velocity and not speed. Too many founders make the mistake of just thinking that momentum is about speed to market, more features, more revenue, and then that gives you a false sense of right direction. Yeah. Sometimes, obviously not always. Sometimes it might give you a false sense of direction, but the reason why velocity is important is also looking at the direction you're moving. Which direction is the market moving? Is your product or your, I see the customers, is the path that you're taking going to be relevant a year, 3 years, 5 years, 10 years down the line, right? You wouldn't want to be in a place like, you were heads down building, you got some early market feedback, but you kind of ignored it because, you were getting some initial good traction. And then you realize 2 years down the line that the market really doesn't exist or isn't large enough, or, it's been commoditized, right? So there are so many different things that happen in these first 3 years of a startup's journey, where it's the velocity that you set in those first 3 years then translates into the culture, and then that culture defines what the success would eventually look like, right? So sometimes people think, hey, I just need to get to 500,000 in revenue or 1 million in revenue, I'll raise a seed round or a series A and then I'll be set, right? Not always. You might get there, you might even raise a round, but if your culture and velocity is set incorrectly, in terms of the vision that you want, then it'll be really hard to change that 3 years, 5 years down the line.
When you talk about velocity there as well, and you said it's obviously not speed of execution, it's not speed of getting to market, it's really being thoughtful in that process. Could you give us an example of maybe a portfolio company or a founder that you have seen who has done a very good job of setting the expectations with respect to velocity, both internally from a team perspective and also externally with their customers and investors?
Yeah, absolutely. I started my investment journey in accelerator program. I was part of GSF accelerator, joined as an EIR back in 2011. And then after the first batch, we moved into an operating partner role. The first batch company, one of the companies was acquired by Facebook called Little Eye Labs. They were building mobile analytics software. So that was a really great initial win. But there was a short journey, right? Like a year and a half, and they were out. The company that has been really transformational is a company called Medibuddy, which is India's largest digital healthcare platform. And was started by two engineers out of IIT Madras, just 2 years out of college. In 2012, in 2013, they were part of the GSF program. And in 2025, they're still around. They are the largest platform in India, doing various different business lines, have raised upwards of $150 million. They were part of my Bangalore program. I used to run the Bangalore program. I led the seed round through Rebright. So I've been with Satish and Enba through a decade plus journey that they've had. And one of the things that I've really admired or what they've done right over the years is really having their ears to the market, right? Transforming their business as they saw the market opportunity changing, right? Going from a pure B2B sort of a play that they initially started with to then a B2C play in terms of telemedicine, then adding another B2B line on top of that as they started to see that opportunity presents itself. And Satish is an amazing founder CEO, right? He's always thinking long-term vision, always executing to the perfection in terms of the product or to what type of customer experience there should be, keeping his investor stakeholders really informed on how the market and vision is changing and scaling. I think it's a testament to their execution that they're one of the only few companies in India that has survived this digital healthcare boom, right? There were quite a few companies that started around the same time doing digital healthcare, telemedicine especially. But Medibuddy is one of the few, I think one of 2 or 3 companies that have scaled and continue to build up their business. So I think they're probably the best example I have.
It's great to hear that you mentioning people are taking the long-term view on building businesses. I often get to meet a lot of founders who are thinking about what do I do in the next year to find a good quick exit that kind of gives me that a little bit of credit in the startup ecosystem, go on to like build the next big thing. That is fine, nothing wrong with that. But the best of the best founders that I've seen, the top creme de la creme, these are people who are constantly thinking about how can I build generational businesses? How can I build the next 100-year thing? Like, how can I build the next Amazon or Apple or Microsoft, all these incumbents in the industry that we're very familiar with. And a lot of them take a 10-year view lens on people, business, just strategy, expansion, all of these things.
Yeah.
Why is that really important? Why is it very important for businesses being built today or founders who are taking or building any company to take the long-term view on a lot of things as opposed to just having those short-term goals?
Yeah, so I think this is obviously a huge debate in the VC startup ecosystem. First off, I'm one of those investors that actually don't mind founders building for the short term and exiting early. I think it's great for especially first-time founders to have a win under their belt in early enough in their career. It really opens up and gives them a lot of confidence to then start again or build something huge. I know investors don't like it because obviously larger funds have larger AUMs and the fund economics doesn't work out and small exits. And Rebright is a little bit unique in that sense that we've had a few short exits or smaller exits, and because we're a smaller fund, it actually works out fairly decent for us. So I think it's important for founders to recognize where and how this opportunity presents itself, right? So, for example, there could be certain products or certain markets where a large exit opportunity actually does not exist. Right. Even if they continue to build for 5-10 years, it would be a middling business and it would be, stagnant, and, that exit option may not even exist after a couple of years, right? And in that case, it's great if you're nimble, fast, you have a good understanding of where this could fit in a larger story, either in a growth stage startup or in a large strategic, and find that home for what you've built, right? And like I mentioned earlier, Little Eye Labs was a great example of that, right? There was another company early in my investing career called Daily Rounds, which is a healthcare ed tech startup raised from Axel, really accelerated, was actually profitable, but was then acquired by a Japanese company, a Japanese ed tech company, and founders had an amazing outcome. So I think that's what I was referring to earlier, that each journey is unique, right? But at the same time, if you want to be truly transformational, right? Like you said, generational company, like you want to have a very large impact, right? What are you building for? If you build an exit early, it probably will not have a huge impact on the market, right? We all know that once a product is integrated into a large strategic, you kind of lose control, kind of gets lost, right? So if your vision and if your sort of sense of purpose comes from redefining an industry, creating something unique, really be that at that forefront of a new wave long term, then obviously you have to build for that, right? Like you have to have that 5 to 10 year vision. Requires a lot of patience and a lot of hard work in the early days, because you really want to get that culture right, as I was referring to. But if you're able to do that, then of course you will be one of the few that survived and created something very unique.
Is it possible for you to, let's say, build a company and get acquired, and that strategic opportunity that comes across your way and being part of this larger organization, where you are able to like latch your wagon onto somebody else's rocket ship and then create that large impact? Are there like good examples of founders who have been able to do that? Because a lot of founders that even I know get their companies acquired, stay on for about anywhere between 3 to 7, 8 years, and then move on to do something different. I've very rarely seen, or there are very few number of companies that are getting acquired and then continue to build businesses as part of the larger mothership.
Yeah.
A good example of something that's much more recent is maybe Prisma Cloud, which is part of Palo Alto.
Yeah.
Even in that case, the founders went on to build something
Yeah.
different. Varun and his team are building Endor Labs at this point of time. But that acquisition, they were around for like 4 years. There are very many examples of companies like that where founders stay on for 3 to 4 years and then move on to something bigger. But do you happen to know any examples of companies that...
In India, actually, there are two great examples of that, which are very well-known brands. Is Phonepe, which was acquired by Facebook and still runs as an independent brand now. In fact, has been spun out and still run by the founders, right? Sameer Nigam still runs it. He has a long-term vision. It's industry redefining. It has like 50% market share in India's digital payments business. Right. And then the other one's Blinkit. It started as Grofers, was acquired by Zomato, and is now I think number 2 or number 1 in India's quick commerce business. So these are two great examples that I know of from India. One interesting story I have is, so we had this company in the EV charging software space called Numocity. And we had done like almost a day zero seed round investment. And by the time they got around to raising Series A, they got an offer from a strategic, ABB, to be acquired, right? And the founders obviously had a similar vision, as you said, that by hitching their wagon to a large brand like ABB that had global presence, they will very quickly accelerate. And partly they were able to do that. They moved into different global markets, scaled their product, got a couple of million in revenue. But then eventually ABB's plan changed and they started stagnating in there. And interestingly, just within the last 1 year, they have actually been spun out of ABB. The founders have bought the company over again and they're still building it. And they've raised a new round and want to scale it all over again. So, it really depends on how passionate founders are about a specific product or space and how long they feel like it's exciting for them, because like a lot of times it's not just about the monetary outcome, right? I think the wider public focuses too much on monetary outcome, thinking that is what gives a sense of purpose to founders. But if you actually talk to them, I would say majority of them actually are not doing just for a financial exit, right? Like they're doing it because they find it exciting. They like doing that type of work. So I guess it really depends on, again, what journey and how it plays out.
Yeah, unfortunately, I've had a number of guests on the podcast who have also mentioned that they find much more gratification in the process of company building.
Yeah.
They find that to be the real challenge.
Yeah.
And they're going back to company building maybe for the second, third, fourth times in their careers because that is what excites them.
Yeah.
Because it's not the money. The money is good, of course. It's cherry on top of the cake. It helps you have every other aspect of your life secure. But what really drives them is, what is my sense of purpose? What am I really doing? Does it leave a legacy and impact in the society? And that's what's driving a lot of these founders. It's good to hear that.
Yeah. And a lot of times, it's also the team, right? Typically, these are individuals who are a bit unique in their outlook towards life. And they like to work with similar individuals as co-founders or early employees that have a unique sort of outlook towards life. And creating that culture, in those early phases of a company actually provides them that home where they're comfortable with who they are, right? And I think if you talk to a lot of founders, they'll probably attest to that aspect as well.
Yeah, and even if you speak to a lot of high-performing athletes, that's what they'll tell you. The ones who have achieved everything in their careers. They've been named the best players in the world. They won all the World Cups, all the championships. They try and seek a different challenge every season. And I was recently reading this book by Dan Carter. It's called The Art of Winning. And even in that, he talks about, as a 2-time rugby world champion, named World Player of the Year multiple times, he was trying to go and see at the later half of his career, where is that bigger challenge left for him to pursue? And which is what led him to France, where he went and joined Racing 92, which was a team that had not won a championship for over a couple of decades. And that ended up being a big challenge for him. And while he was there, coincidentally, they ended up winning the championship in the first year. So all of these things kind of like show you that the best of the best people are constantly looking for challenges. It's not the monetary outcome that's really like driving them. Now, bring that conversation back, to... we talked about velocity. Now we want to talk about momentum because that is somewhat related in some sense, but largely also differ in their own, the roles that they play in getting a company from point A to point B. Yeah. Now let's talk about momentum, both in the case of what you have seen some of the portfolio companies do, some of the best founders that you worked with do and not do, and how that kind of like also applies to anybody who's starting a company and running a company in 2025. If you could draw some correlations between all of those things mentioned, along with the velocity bit that we touched upon, that would be fantastic.
Yeah. No, great. So in terms of momentum, the way I really look at it is, again, I define it a little bit differently than velocity or speed. For me, the momentum is defined from a standpoint of learnings, right? Like, are you learning enough about what you're building, where you're headed, what is working, what is not working, and really being honest with yourself and your team that, is this the momentum that I want to be on? So I would basically then define momentum as your learning experiences, your classic, look where the puck is going versus, just sort of running in one direction. And those momentum learnings that you get, right, can be in, spurts in growth, right? Like for a few months you'll not have anything, so, and you're kind of feeling lost a little bit, but then you could have a few days or a few weeks where you start to have some very interesting conversations with, let's say, investors or customers or general market changes, and really gives you a new perspective on your momentum, right? So that's how I would sort of look at it, and I think it's important to have these touch points, I would say, with the market. And this is the reason why a lot of investors like to only invest companies for like 18 to 24 months, because they want them to come to the market and get a sort of like a reality check that are you really on the right path, or does it really even make sense? And of course it's a very investor centric lens, but there is a dipstick check, so to speak, that you're doing on your momentum, right? And I think sometimes founders kind of, I don't think so they deliberately ignore it. They just kind of lose sight of it, and especially if it's their building revenue and closing customers, and they think that they're on the right path, but then 2 years later they realize, it's not really where they wanted to head. So I think that's the way I would sort of define it.
I completely agree with you there, and probably the point that I want to add to that is, with respect to momentum, it's a very tricky phase to be in. Now, for momentum to actually work, let me first start by defining momentum in terms of how I think about it. For me, when I'm thinking about company building and the momentum, it's making sure that I have everybody in my team, my investors, and my customers kind of like aligned in knowing what we're thinking and doing for not just the first year or the second year or whichever year that you're in operation, but also understanding the speed at which you're going to be shipping products. And I'm going back to speed here, which is slightly different from the way that you are defining speed as such. But it's, hey, you need to know what's coming up in Q2, Q3, Q4. So that your customers start planning that way.
Sure.
They start building their roadmaps knowing that, hey, here's a vendor, here's a customer, here's a partner of ours that we are working very closely with. And they're thinking about it from the next 3, 4, 5 quarters. And this is the plan that they have. And therefore, we can perhaps plan our aspect with respect to how we work with them way sooner. So you're kind of putting the ball in somebody else's court, starting to, make them think about what the next few quarters are going to look like. Similarly, from a team perspective as well. Sure, you're building currently to ship for things that are urgent, but you're also getting your team to start thinking about what's Q3, Q4, Q1 of 2026 going to look like.
Absolutely.
You really want them to start thinking about the larger, broader picture. And then it comes down to the founding team, or largely maybe the CEO, to make sure that everybody then is on track. Your investors kind of like understand, and even from a momentum perspective there, your investors really need to understand that, hey, if this is the vision that they're building towards, what can we do to like support them? And from our perspective, it's like, who are the investors that we can rope in who can help be part of that momentum? Get us perhaps even one leg faster than how we are thinking about getting, both from a shipping perspective, investor perspective, customer perspective, hiring perspective. That's how I define momentum as such, is making sure that everybody is in tune with what's happening maybe a couple of quarters down the road. And for all of that to fall into place, you need to build, you all need to be in the same page, but you also need to have that culture where everyone aligns. Every time we think about culture, we only think of culture from an internal perspective. But from my point of view, culture also then spills externally. Your customers need to understand how they need to work with you. Your customers need to also then be open to giving you that feedback. They will trust you to give you information. They will trust you with their plans only if they believe that you are building something long-term. Only if you have that velocity, as we mentioned. If you have that vision, as we also talked about. It's very important to communicate to your customers and not just keep asking them about, hey, how's your product? How's our product helping you? It's less to do with just that. That's day-to-day stuff. But brainstorm with your customers and say, how are you thinking about it? How can we be part of the plans? This is what we're thinking about. How can we think together? How can we win together? I think all of that becomes part of that momentum as you're building.
Yeah,
What do you
absolutely.
think about that in terms of how do you
Absolutely. I
look at
think
it?
you are bang on that. And in fact, maybe a line or a phrase that's oft repeated that sums up the whole thing is that, typically we all underestimate the amount of changes that can compound over a longer period
Yeah.
and overestimate what we can achieve in the short term, right?
Yeah.
So, and that's really what momentum is all about. Just, compounding over a longer period of time and really have that conversational alignment with all your stakeholders. So
Yeah.
completely agree.
I agree with you. And then bringing that back to like the third point that you touched upon as well, you talked about culture to a larger degree in your first response. And then along the way, it's kind of like come up. And when I was talking to you about momentum, I felt culture, both internally and externally, is very important as well. Now, you're building a company yourself. You've been part of a VC fund. You've been part of a Japanese Indian VC fund, or largely, which is a unique culture in and of itself.
Yeah.
You've invested in companies that are building in India, that are building globally, that are building specifically with the US market in mind. So when we talk about culture, there's not just an internal culture. There's a culture that comes to working with different stakeholders, investors, your customers, so on and so forth. How have you seen your best performing portfolio companies manage culture, both internally and externally, as well as how are you thinking about culture overall as you're building your own company?
Yeah. I think the best way I could define culture is building that sort of self-awareness, not just as an individual, as a founder, CEO, but also to have that as part of the team, founding team, your early employees, and then your next stakeholders in terms of your investors, right? On being candid on what is working, what is not working. Is this exciting? Is it not exciting anymore? Are we really building it because we like doing this, or are we just doing it for some other reason, right? So I think too often we sort of get there's this narrative built of just being part of that grind, right? Like, yes, pull up yourself from the bootstraps and just keep doing. In India there's this big debate going on 70-hour weeks and all that kind of stuff, right? I think what people miss is that it's not really about number of hours, or it's not really about what you're executing. It's also largely about, are you enjoying yourself, or do you like what you're doing on a day-to-day? If you are, then it doesn't feel like work, right? Like you maybe take like overnight flights and or have long days of coding till midnight, but you kind of like what you're building, or you kind of like who you're working with, so you want to be part of that culture, right? Like you want to continue doing that. And I think that is very important to keep in mind, right? And if that is not working, then you really, in startups, there's only two choices. Either you change it or you stop it, right? Like, unlike in a large company, you're primarily doing it for money, right? Like, you need a salary, you need money to run your life and your family, so you have to work, right? But startups are not like that. Like, if you're not enjoying yourself and if it's too much of a grind, you're gonna burn out fairly soon. And it's a very binary outcome. Like, majority of the startups don't make it, right? In terms of financially. So unless you enjoy the culture that you're building, it's gonna just make you miserable, right? So that's really important. The other aspect of culture, what I feel is, it's really important to set the right tone in terms of product building and GTM, your initial sales and marketing processes, or your how you're going to find your right customers, how you'll scale it, the whole go-to-market strategy. These get defined in that first 3 years, right? And after that, it really becomes harder and harder to change it, right? It's like a child growing up. The formative years is where we define what kind of human they'll be. After their teenage years, once they're an adult, it takes a lot of effort to change that, right? And startups are very similar in that aspect, at least according to me, that if you spend the first 3 to 5 years in a certain way, it'll be really hard to change that later, right? So like the way you defined your go-to-market strategy, how your salespeople operate, or what type of customer success you want to, how do you define value for your customers, right? And how do you make money? What's your sort of profile in terms of your margin profile and other things like that, right? Like, how's your engineering organization run, right? How do you take pride in what you build? Do you have a certain sense of ownership in terms of what quality of output do you want to put out there, right? Like, these are very important questions. And if they're not answered in a manner in which excites you as a founding team, you will be again miserable after those initial years, because you're going to get stuck. And like you could try to live through it saying, oh, I have a vesting schedule and I gotta suck it up and do this for the next 10 years. But be very careful in what kind of culture you're setting yourself up for, right? So because there are too many founders who 5 years in, 8 years in, and are just miserable in what they're doing because the culture is not what they had in mind. But they're sticking around because the story is good. They obviously are one of the few companies that are still working after 5+ years. So I think that's why I say that it's important to keep that in mind. And if it's not working, and let's say it's not working with your investors or your co-founders, or the market's not there, I think there's nothing wrong with moving on, right? I think we again, a narrative is built that you gotta just suck it up and keep doing it for years and years, and somehow something magical will change. If it didn't work out, it didn't work out, right? And there were certain decisions that got made and weren't didn't align in the right manner, right? And it's part of the learning process. It's built into our financial models, either as investors or even as founders. You've learned a few things and you move on to your next opportunity. So I mean, that's the way sort of I look at things. So.
I think you put it really well, that it's actually built into all of our models. Like the VCs kind of like know that only the power law. They only know a few companies are going to give you back the fund, and probably even take the better returns than you're expecting. And from a founder perspective, I think most founders know that they're signing up for something that has less than 1% chance of succeeding, or at least they should if they don't. But the other thing that I really like that you mentioned there is, one, you got to do it for the right reasons, and you got to really love the journey. I have heard and spoken to a lot of founders who are a couple of years into the journey, but they're not really enjoying it. But they're in it because they're like, what is the world going to think if I just walk away from it? It's that narrative that a lot of people are just stuck with, where they feel, if I leave this, maybe people are going to question next time when I go and start something. Or if I go back and want to find a job, people will probably think of me as somebody who failed. They half the times, are in their own heads. And unfortunately, that's not a nice place to be in. And this theme keeps recurring over and over again here on the podcast, where I've had plenty of VCs come and share that if it's not working, if you're not enjoying the process, either you take a step back and you find the right person to fill in the shoes, or you as a team decide that you need to wrap things up. And there's nothing wrong with both. In fact, Sriram Vishwanathan, who was here on the podcast about a month and a half ago of Celesta Capital, he mentioned that they got somebody in, an external CEO, who put in his own capital, and it didn't work out 3 years in. And he went on to go become a CEO of a different company. Now, that's an example of everybody trying to like vet a leader, bring that person in, and things not working out. Originally, because the founders decided to move away. So that particular use case had two examples of, a CEO position not working on, the founders deciding to walk away. And today, all parties, the CEOs, the investor, and the founders are all doing well in different organizations. So there is an opportunity for you to go do something. You really need to find what is a good fit for you personally. Because you will run out of steam. More than running out of steam, you don't want your startup or your job to become like just another job. What's the point? You might as well have stayed in that big tech job or the other thing that you were doing, as opposed to spending all your time building this company that you thought once would be, the way that you had imagined in your head. And by that, I don't mean $1 billion outcome. By that, I mean everything like culture, working with the right people, having that excitement, wanting to solve a problem that really makes hopefully an impact, but more importantly, gives you the satisfaction that you're working on something that you wanted to. And if you don't have that, I think it's very difficult. And from a culture perspective as well, just to complete my thought there, I do feel it's very, very important for founders to start thinking and talking about this from day one. It's really, because it's so, you can get complacent so quickly. You can have customers coming in. You might be doing that $1 million in revenue. And if you don't talk about this, quickly in 6 months' time, a lot of things have just, drifted away. And you don't want to play catch up at that point of time and try to, because sometimes the customers have, gotten to a place where you probably had to hire 3-4 people, a couple of A's, maybe a customer success manager, and who knows what else. In order for you to catch up with the business, you're then trying to like hire people, and you forget how to integrate them into your company. Give them the values, the principles. and manage everything in a sense that kind of like ties into what you're doing. And before you know it, you might have more people, more resources at hand, not really knowing what the game plan there is going to look like.
Yeah.
So it's really important for you to constantly keep talking about it. And I think you're also mentioning to
Yeah.
that.
Yeah. In fact, yeah.
To some degree.
In another way I would phrase it is I read something recently that really changed my perspective on this whole thing. So we have this thought process especially in this industry and even in general about businesses needing to last for a long period. Like, so let's say somebody starts a bakery, right? They were really passionate about baking. They loved it. They did it for a few years, and then they were, for whatever reason, didn't want to continue it. Maybe they weren't making money, or they didn't find it exciting anymore. They shut it down, right? Typically, the culture that we have says, "Oh, they failed at being a baker," right? Or this small business failed, or whatever, right? But why? Why do we think like that? Maybe it had a great run. It was a great business. It was a great product. The people who started it were very passionate about it when they first started, and they had a great time doing that. And maybe after a few years, they decide that journey is over. Maybe they don't want to be on that journey anymore, and they want to move on to something else. We should normalize that, right? Everything doesn't need to have a tag of, why did this shut down or why did this fail attached to it, right? Sometimes things just, run their course, and that's totally fine as well.
It's very important for a lot of people to understand that. And one of the best examples that I give people about this context is of Amitabh Bachchan.
Yeah.
It's a great example because here was a movie star who was the hero for a good part of his career. But then quickly he realized that as he's walking towards his 50s and 60s that he had to evolve.
Yeah.
And he largely played the role of a father, or, that paternal presence in movies. And he's been very successful doing that too.
Yeah.
It's knowing how to evolve and mold yourself to circumstances, the age, the environment that you're in, which is really important. And knowing that, hey, you're sunsetting on one particular persona of yours and then taking on another is not a bad thing.
Yeah, absolutely.
You can be successful in what you do the next time around as long as you're aware about who you are and what you want. Yeah. Otherwise, it's going to be very difficult for
absolutely.
you
to and he's a great example of this because he's most famous now for his role as India's version of Who Wants to Be a Millionaire, and he's like household name again over because that show's been running in India for a decade and he's the face of it, right? So he's one of those people who were at the top, then hit a rough patch, then climbed up and became a household name again. And in fact, he's also a brand ambassador for Medibuddy, the company I mentioned earlier. So, yeah.
It's very important to redefine yourself as founder. So I think that's the point that we're trying to make here. And now coming back, I think subtly in those 4 points when you were talking about, you also talked about pivots. Mm-hmm. So I want to draw you back a little bit to that and why pivoting is a very important thing for like founders, or why it's not a bad thing when you're thinking about it, because when it's happening to you, and I can speak to it from a personal perspective, because when I started Lean with my co-founders, in the first 6 months of the company, we were building something in customer success and then built a product, took it to the market, quickly realized that there were no takers for the product that we were building because one, the product was not super differentiated. And secondly, investors weren't too excited about the space that we were building in, which is obviously very important because you need to be building in a space that has a larger TAM, and we quickly realized that we didn't. And when we went through the pivot journey, which was roughly about 2 months, it was the toughest period that probably we had experienced as first-time founders.
Yep.
And during that journey, we were questioning ourselves. We were trying to see whether we were cut out for this, whether the team was the right fit, whether we brought the same dynamics that we thought would be successful to build a company. And we threw every dart at the board in terms of ideating and coming up with ideas and trying to see if this is something that we should be building and whether we had complementary skill sets more than product market fit and all of that thing. We're trying to understand whether there was founder market fit. So all of this journey happened in 2 months. And I think the best thing that came off of that 2-month reflection was, or what we call as pivot, is coming to the realization that don't be married to an idea.
Yep. Absolutely.
Because startups are so uncertain. And we had read about it, of course. I mean, I'd spent some time in VC and I'd seen a lot of founders go through it. But when it happens to you, it's very different from when you see it happening to somebody else.
Yeah.
So, of course, having that experience from seeing from a distance and now when it's happening to me, I quickly realized and was able to share with my team as well, hey, this is pretty normal.
Yeah.
Everybody goes through this. And the most important thing that we need to do is, hey, we need to like be passionate about solving a problem that is ubiquitous, that has a large enough TAM, and which investors are also excited about. And more importantly, can we get behind that and see if can we build something that's a little bit more long term, not build something that's um, more of a vitamin. You know, you want to be building a painkiller in the long run. So can that be possible? Um, and that's when we came across, you know, what we're doing here today at Lee and building a security company. But that journey was very important. You talked about pivot to be very important, and even today we think about that and keep our mind open to, hey, if we have to pivot, and pivot doesn't have to be you completely reshaping the company philosophy and the strategy. It can just mean, hey, we were focused on this market for the longest period of time, but it seems to me that there's a little bit of a pull from an adjacent market. Let's try and focus a little bit of our time, maybe 20% of the time, and see what comes off of it. If it does, let's expand to 30, 40, 50, and then maybe that becomes your biggest pull, and that becomes your primary market, and everything else becomes your secondary and tertiary market. So how important is it for founders to have that mentality? And again, bringing your founder hat back into the conversation as well. How are you approaching different customer segments and kind of keeping an open mind to knowing that, hey, we'll probably have, you were mentioning to be, you have customers in the financial sector, but also at the same time, you're perhaps experimenting and seeing whether there's a better pull from markets that are adjacent.
Yeah, no, it's again really important topic, and especially as founders to keep in mind. And it's interesting because I just remembered you were also on the investing side before becoming a founder, right? And for me, this has been one of the biggest relearnings, as I'm calling it, in the last sort of year and a half of me getting back into it, because even though I was a seed stage investor, typically you're coming in even at a seed and a year or so into that company journey and company building process. Very few times that we would write a day zero check, right? Typically, it's where at least some product market fit is starting to get established or some initial sort of traction is coming in. But typically in that 0 to 1, that first year, almost all startups go through this existential sort of a crisis, right? Very few companies are like from get-go fully successful, right? In fact, it's almost like a rite of passage. And we were no different. We had that as well in my latest journey. And it was actually quite nerve-wracking for me because, like you've done this for 20 years now. You've been part of operating teams, you've founding teams, you've been, investor for a decade. You've seen it so many times, but when it's starting to happen to you, you're like, okay, this is interesting. And luckily, for me, I had a mentor who kind of I was able to bounce this with and just, really understand that process, right? Because it's also a little bit of a self-discovery for yourself, right? What are you doing? Who are you working with? Where do you want to get into? And, sometimes pivot doesn't have to be just like 20% adjacent. Like, the most famous story is of Slack, right? Started off as a gaming company and is like now huge communication platform, right? So and there are plenty of journeys like that as well. And for us, that basically was defined on a very simple metric. We were like, we don't want to build something that we don't feel excited enough to sell, right? If we are going to build something, it has to be somewhat unique in the market where it creates an aha moment for our customers, and literally they have to say that, oh, I've never seen this before. Right. For me and for my co-founders, I was like, we're too old to get into this and just build something commoditized, right? Or just really go through that grind without having to we wanted to be proud of what we are putting out there, right? And I think, and that's what led to a little bit of a pivot for us as well in the first 6 months. And then after we made that choice, we really just put our head down, right? And like, okay, now that we made this choice, we're going to go and build something that will be industry redefining if we can get it right? And that's really where we are now. So hopefully that pivot works and we get to scale this.
Yeah, no, it's probably one of the best things that a founder can go through.
Yeah.
And most founders, I think 99.9% of the founders will go through some sort of a pivot in some way, shape, or form. Nothing's always going to go according to the paper idea that you initially had.
Yeah.
And once you start building, you realize that the market forces will pull you in different directions and you will need to evolve or unfortunately perish. That's the best use case of survival of the fittest
Yeah,
in real world
absolutely.
is the startup environment.
Yeah.
And closing the loop on the first 4 points that you had made, and coming back to your founder journey now at this point of time, because I really want to spend a little bit of time talking about what that shift from being an investor to being a founder really takes. In my opinion, I think there's a huge mentality change that perhaps needs to be made in the first place.
Yeah.
Because one, you're no longer in the game, as people say, and most importantly, you perhaps are building. Or let me actually not answer that question. Let me put that question back to you, because I may have a few thoughts which I can share right after you answer it. But what were some of the things that you thought you kind of like knew going in and building perhaps for the second time, but after about 10 to 12 years? And how quickly did you have a reality check if you did so?
Yeah, I think the biggest sort of learning or relearning, unlearning, whatever you want to call it, is just sort of remembering that being a founder is about being an eternal optimist, right? There are just so many things thrown at you on a day-to-day basis, sometimes hour-to-hour basis, that if you get stuck in those things, you're going to quickly drown and take your team and investors with you, right? Especially if you're the founder CEO, right? Because you're the guy that everybody or girl that everybody looks up to make a decision. Like, are we going to do this or not do this? Are we going to go in after this or not after this? And that's a tough spot to be in, right? And as investors, you are automatically primed to think of why you shouldn't do something, right? Like you're basically looking at investments. Of course, I know that you are, as an investor, you are also looking thing from a positive lens, that how big can this get, right? Like that's one of the questions that we all ask ourselves. But primarily, once you've answered that question on how big can it get, it's all about like, okay, what else can be wrong with it, right? And how do I prevent that from happening, is part of the whole DD process. And how you're doing some of the portfolio management, and so to speak, right? Like you're one step behind, you're always in the back seat.
Yeah.
You have the luxury to take your time to make decisions, which obviously is not present as a founder, right? Like, which is what defines the momentum, the velocity, the culture you're setting. If you start to deter on your decision for more than a few days or more than a few weeks, the path starts to change, right? And then at the same time, keeping true to that vision that you set out with, making sure that you're continuing to build accordingly, so that you're not sort of going in a direction which you don't find exciting after a year, 2 years, 5 years, right? So I think those are the things that for me has been very important, and those are the sort of relearnings and unlearnings I've had. So
Yeah, in my opinion, I think everything at an early stage startup needs to be done yesterday.
yeah,
Everything.
yeah, absolutely.
So it's a very hard. You're always playing catch up.
Yeah,
In terms of whatever you're doing. Your customer probably should have come in yesterday.
yeah,
You had to hire that person yesterday.
yeah,
The problem that came up right now shouldn't have come up because you could have solved it yesterday. But you don't see any of these things coming. And sometimes everything hits you at the same time, which is, in my opinion, the funnest thing about my job is not really being prepared in some sense. And what I mean when I say that is, of course, you have all of your guardrails. You can plan things out for the next month, but there will always be something that will come and hit you in the face that you could have never foreseen. You could have never planned for that.
yeah,
And I can give you a quick example of that. In fact, we went through like a nice design sprint, and went through like a beautiful process with this amazing designer, created a logo, loved the colors, went through the whole branding exercise and everything, and came up with what we were really married to. And then out of nowhere, one day last year, we receive an email from somebody who says, don't you think your company logo and ours is very similar? And then we looked the company up and we were like, shit, yes, everything is similar about your logo and ours. Now, we couldn't have planned for this. I would have never, ever thought about this in my wildest of dreams, that my logo will look very similar to a different company's logo. And now we're like, okay, one, how do we respond to this person? How do we then how do we get in touch with the designer? And how do we fix? These are three things that I never thought I'd be dedicating my time to. And now as a team, we had to like put all of our brains together and rack up and come up with ideas in terms of what we'll do in terms of logo change. And then we quickly realized that the other company had not trademarked their name. And we were like, we'll just go and trademark it and save ourselves the time in terms of everything else. So technically, if any infringement happens, they would be infringing ours.
Yeah, not the other
way around. So we just went and trademarked our logo. So that was the fastest way of solving that. But even that took us about a week because we sat and thought about should we go through an entire design sprint all over again? Do we engage with the same designer or a different designer because we felt somewhat a little miffed with the designer that we had, and then we had to go back and take an internal stance on it, speak to the founder who had reached out to us, and then speak to a couple of attorneys, trademark people, and be like, you know what, let's just go and pull the trigger on this as soon as possible before somebody else does.
Yeah.
And that's what we ended up doing. And then we quickly realized that many companies have gone through this journey as well. Coca-Cola, for the longest period of time, fought a trademark lawsuit that nobody really knows about. But when you go back and read the history, that lawsuit went on for about 7 years. But nobody really talks about it because there was hush-hush and Coca-Cola obviously had that money.
Yeah.
But there's a little bit of logo infringement that happened way back in the early days of the company as well. So we're like, okay, this is a pretty common thing with the logos and in design. So that was like an industry thing. But that's the kind of learning and things that can hit you in the face that you can never dream of or plan for. And that's the thing I think is really challenging about being in the founder shoes, is that you never know what's going to happen tomorrow. And if you're the kind of person who enjoys problem solving, and you're the kind of person who just gets excited by the thrill of not knowing what's coming, then I think the journey can be a little bit more fun for you outside of everything that you're building, because your business is your business, but then there are things that will happen that you can really be excited by because you don't really know what's on the other side. And that's the thrill of adventure. If you are that seeker, then that journey can sometimes be what a founder journey is.
Yeah, so absolutely, and I think too many times we forget that. But I'll also give you a flip side perspective on this, right? So hear me out. So when in my first 20 years of my career, I had this perspective that, hey, everything needed to happen yesterday, right? Like, okay, well, I need more customers, I need more more features in my product, or I need more people and so forth, right? More recently, I've again, I read a few things and I've started to develop a little bit of a different attitude towards it. Like, it's more of almost like a Zen, right? Like, okay, everything will happen at its own pace when it needs to happen, right? And the biggest thing that sort of taught me was over the last year, we actually spent a lot of time building a product, right? So the typical industry narrative that got built over the last decade, especially in SaaS enterprise software, was, hey, quickly build an MVP, put it out there, quickly get some design partners, iterate a lot with them, and then you will have something that will be, you need to be in the market and building with your customers and so forth, right? And we decided to take a little bit of a different approach to it, and largely because of what we were building is like, it's really hard to showcase the value as an MVP, right? Like, we were building like risk analytics software for banks and financial institutions on stress testing, using a lot of like proprietary public data sets and so forth, right? And you gotta like really show that your product works for them to have any kind of trust in you, right? Like, you can't show anything half-baked, right? Your forecasting models can't be like, just spitting out whatever random crap, right? So obviously it took us a long time to build it by the recent SaaS standards, right? It was a 9-month grueling journey for the team to get the data pipelining right, the modeling right, the UX refinement right. And we really only started doing demos almost to the point where we were at V1, right? Like, we were 0.8 or 9, if you call it from a traditional sense, right? And for me, again, that was a bit nerve-wracking. Like, I'm founder CEO sitting there and can't really talk to any customers because, we don't really have anything to show yet, right? But the way I sort of thought of it is that went back to the way Steve Jobs used to build products, right? And his product philosophy, where he basically was of the opinion that you're not going to put anything out there where the customer has to figure things out. It should be where, it's something that they've never experienced before, something that works right out of the box. It's a unique experience that you're providing, right? And really take a craftsman-like approach. And incidentally, the Japanese do this really well, right? Like, they're very, very they're proud of their craft, right? Like the artisans, the artists, right? Like spend a lot of time refining things before they show anything to anyone, right? And I started to sort of, at least to just placate my own self, had that in the back of my mind. But then once we finally went out to the market and started doing them, we really saw the effect of that, right? And looking back in hindsight, I think that was the best decision we could have made. It was difficult in those 9-10 months, but now we're starting to see the fruits of that, right? And I think too many times we as founders just go by whatever is the current narrative and forget that, look, it really also depends on what product, what market, what do you personally like doing. Don't change that, right? Like, don't go by whatever the experts or whatever, the current batch of investors or, thought leaders are saying. Just do whatever you feel is right? And that's going against the current is literally your job, right? And if you're not doing that, then you're going to be miserable again, right? So I think I wanted to tie that into this conversation on just letting things happen when they're supposed to happen, right? As a founder as well, right? Sometimes it's meant to be that way.
I think it's a very well put idea. And you touched upon a very interesting thought there, which is you are given a lot of credit as a builder for trying to do things outside of the norm. And that's what at least Silicon Valley was built on. It's this idea of trying to do things differently, try and shake up the things, the incumbents and the ecosystem at large. And if you are trying to like fall by what everyone is doing, then you're again falling into the pack as opposed to trying to redefine how things are done.
Yeah.
And I guess that's where, in some sense, a senior, second time, third time, somebody with experience has that maturity and has that wisdom in terms of saying, hey, you know what, I will let things happen as they happen, versus a lot of first time founders who feel it needs to be done. It needs to be done now, yesterday. There's that urgency because that's the narrative and norm that
but
we've
that's
heard
also
of.
important. That's also very important,
It has
right?
its
You can't,
place, for
absolutely,
sure.
absolutely.
Yeah, but you grow up listening to all of these because, places like YC will come and tell you, break things, ship things faster, iterate, and that's the only way to do things. It's not the only way.
Yeah.
It's the only way that's proven right for some of their portfolio companies who have gone on to become successful companies as well. But there are also other ways of doing, of running businesses and breaking things.
Yeah.
But it can also be done at your own pace, but at the pace at which your industry moves. You can't be in the healthcare industry, for example, and say, let's move quickly, let's move fast, let's move. No, it's not going to happen. One, depending on what part of healthcare you operate,
period,
there's a gestation period. The customers are not going to move at the same speed because they're slow. The industry regulators may not move because the FDA is not going to move according to the pace that you want it to. The FDA is not going to premium process your approvals. That's not how it works.
Yeah.
So there's a time that's required for certain things to mature and come to fruition. So you need to work really well according to the structure of the industry and the guardrails of the industry to a larger degree. So I think it's a very good point that you made to provide the flip perspective on what we were discussing.
Yeah. And at the same time, as founders, it's still your job to kind of find ways to compress that period. Like, how can you do things faster in terms of product building? How could you move your sales pipeline, your funneling faster? There's nothing wrong with that urgency, and you absolutely should have that. But the only point I was trying to make is that I think you should, as founders, we should be smart about it, right? And not just go by whatever is the prevailing norm. There are multiple ways to build or cook something, right? And if have your own recipe, right? And maybe you like the flavor better because you built it according to what you like, and not because you found that recipe online or on ChatGPT.
This last segment, I really want to talk about some fun things. And these are similar things that I have perhaps gone through in the last 2 years or so of my builder journey. So the first question to you would be, how easy was it for you to move away from being an investor and donning the founder hat from an industry perspective? Like, how quickly was that embraced by your peers and the people that you worked with?
So for me personally, it was, I think the best example I can give you is like jumping into a cold pool.
Yeah.
It looked really exciting, and I jumped in like, feet first, and then I realized how cold the water was, and I was like, oh shit, like I gotta now get used to it, right? I think from industry and peers, of course, I got this question a lot, man. Like everybody I met, from founders to VCs, and everybody would be like, but why? Like you were a general partner in a global fund, investing across borders. I was already a partner. I already grow that and make enough money. It's like, why would you do that? Nobody, very few people make this decision. And at some point, it actually became exhausting for me to answer that question, right? And I was like, yeah, I literally told that I went to a conference and an event, and some like founder asked me, I was like, I just like jokingly said, yeah, I went mad for 60 days, right? So, because I was like, hey, I was at a point in my life where I thought that, hey, I want to make sure that my learning does not stagnate, right? Like, and not that it was stagnating, as I have a lot of respect for my VC peers. They're some of the smartest people on earth. Most of them are always reinventing themselves, learning new industries, new models, putting themselves out there. But the amount of learning, and they'll attest to that as well, that you can get as an operator and a founder, especially in a new technology wave, is 10x or 100x than what you can get if you're sitting in the back seat, right? And I felt like I was young enough still to be able to capitalize on that and be part of that wave as an operator, as a founder, right? So I think and then once people recognize where and how I was coming from, then it's been great, right? So for example, in Rebright, I changed my role from being a general partner to a venture partner. So I still work part-time with the team, still support my portfolio once in a while, as in when they need my advice or support or help. Opportunistically also invest with the fund. We just did a new investment in a Bay Area-based company in application layer AI. So very congruent to what I'm building as well, right? So I think, we as an ecosystem have created this weird divide between founders and VCs. Like literally people would be like, oh, now you're on the dark side. No, but I guess you now move to the light side. And I joke with people, it's like, yeah, everything is gray, right? There's no dark or light, so to speak, right? So I would encourage people to like not create this big divide between two sets of people who are actually very similar in nature, right? Like they're doing things against the mold. They're putting themselves out there. They're trying to change the world and create that dent in the universe that Jobs talked about, right? And we should respect that and enjoy the journey.
Yeah, I think I found the perfect trailer for this episode, which is I was a GP and I went mad for 60 days. It's going to be the hook for a lot of people into the episode. No, on a serious note as well, I got this question often when I switched over from being an investor to becoming a founder. I said, a lot of people walked up to me and said, oh, it must have been so easy for you to go fundraise. People must have been throwing money at you. I'm like, no, dude, I got 146 ejections for the first idea that I was building.
Absolutely.
Like, I spoke to every person that I knew within the industry, and everybody said what you're working on is not a great space. And we still thought it was a good space to go and build for the 6 months and quickly. I mean, still say quickly, but 6 months felt like a long time. But 6 months in retrospect was still quick for us to realize there was not much to build there. But no, not every investor is dying to throw money at you just because you were an investor. Just because you were an investor doesn't mean you're going to be a good operator.
Exactly.
It's very different.
Exactly.
So I'll pose a similar naive question to you as well. Was it easy? Because I know you had a few of your LPs have put in some capital in your current company, but how difficult, easy is it for you to raise capital as a founder who's been an investor for over 10 years?
Actually, I think there is a little bit of bias in the industry against, if you've been an investor over a decade, then you've obviously built your muscles a certain way, and then if you have to suddenly shift, it is a big challenge, right? And I don't, I can totally understand investors, both angels or VCs and others, who find it a little bit difficult, right? So it wasn't really easy for me to explain why and what and where we want to go, and also I didn't want to start and make fundraising the game. Like a lot of like senior investors and founders, when they go on this journey again, there's this expectation that, oh, you are of course going to raise a big round, right? You're going to raise a couple of million, tens of millions. And in a weird way, that's how people started, like, in the industry, defining success. That, oh, you raised a 10 million seed or a 50 million A, and that's why,
because you're a
you're,
VC.
yeah,
It's
because you're a
not
VC
because
or
your
because you're
idea
a,
was exciting. It's
yeah,
not because the vision
yeah,
was brilliant or the
yeah,
team that you put together was great. It's because, oh, you were a former VC, so it was easy for you to raise money. It's almost akin to like saying, the nepotism that's associated with Bollywood. Like, oh, you're from a family and therefore you raise money. It's comparable, sure, but it's
yeah,
not really the reality because it's not how it operates. You
yeah.
being in the
No,
industry for 10 years,
yeah.
people must think of you as largely an investor and maybe not an operator, but they forget that you had 10 years of experience building companies before that.
Yeah.
And you were supporting a lot of the companies while you were an investor too. So there is that thing for you to toggle around and play with. It's not like people were throwing money at an investor who wants to go become a founder.
And not just that, right? I also didn't want to. So I was very mindful of the fact that I didn't want to come out with a very large round, because that's not how I operated as an investor either. So for a decade, I advise our portfolio companies and our founders to be conservative with the amount of capital they raised, at what valuations they raised, to keep that optionality, right? And I actually feel that overcapitalization is one of the key reasons why a lot of companies don't work out. Either you raise too much money and burn it in ways in which are distracting, or you are in a market which probably was not as big, and then you get stuck into that model and that round that you raised. Or there's so many ways in which large capital upfront is probably not a great idea, right? So I wanted to be very conservative about it, and that's why we only raised like $1 million, right? And it was also from a perspective that I really don't know where and how this is moving, right? I want to see if there is an opportunity and then raise more capital, not the other way around, right? I very much subscribe to the philosophy that capital should be for scaling. You should be true to what venture capital means, right? Which is you're raising it for a venture scale outcome. If you don't have a visibility to a venture scale outcome in what you're building or what the market opportunity is, probably doesn't make sense to raise a venture scale round, right? So that's really where I came from, and as we identify, we will raise accordingly.
I wanted to end this episode on this question, and I was thinking about this on my way up here as well. There's a lot that I have discovered about myself as I've made that transition from venture capital to being a founder, and I've loved everything that I've learned about myself. And largely, I've learned a lot of things that I'm not good at, which is fine. Which is what is also really important for you to know what you're not really good at.
Yeah.
So posing a very similar question to you as well. During this transition, it's about a year and a half now, so I think it's good enough time for you to have, you're probably sitting on that. What have you learned about yourself that has both caught you by surprise, but also at the same time given you more conviction that you're doing the right thing and this is the right time for your founder journey?
I think the biggest way that I would like to define this is, it has really just, this journey is so tough in so many different ways that unless you build that self-awareness on who you are as an individual, what works for you, what doesn't work for you, what are your fallacies, what are your personality traits that are probably not helpful, it's really brutal otherwise, right? If you're not self-aware about who you are as an individual. And in fact, one of the portfolio founders in my previous fund was, they really defined this for me, right? And like, founders are a great way to find out what kind of human you are, right? And I think that's been probably more important for me as an individual to go on and get this self-awareness journey going again than even any success that I may or may not get as a founder, right? Because it shook my worldview and value system enough that I'd sort of started to get used to over the last decade, that it's created that impetus for me to go on that journey of self-discovery, of learning, of how do I become a better human being, become a better father, better husband, better friend, and a better son. Because ultimately what matters in life is like the people that you surround yourself with, and how do they view, and what can you give back to them. And if the journey you're on is helping you do that better, then I think that's an absolute best journey to be on, right? But if you're not thinking from that perspective, you're not taking those learnings in the right manner, that the way the universe is presenting them to you, then you're going to have a very tough time, right? So that's how I look at things now.
I love that. And that's a brilliant note to end the episode on. You've obviously been able to share 4 key things that I think we made this episode around, which was velocity, momentum, pivots to a certain degree, culture, and unlearning.
Yep.
That's become the theme for this episode. And over the course of this, I have tried to maintain a fine balance between your learnings as an investor and how that correlates to you being a founder. And you've done a brilliant job in sharing both insights from either side of the table. And I hope it gives our listeners more perspective on what it takes to become a founder after having spent some time in venture, and how that experience can also help you, and also it sometimes not help you to a certain degree, where you have to shed your skin about everything that you know about the industry and go back to like building from the ground up.
Yeah.
So this has been a great episode, wonderful conversation. Thank you so much for your time.
Yep.
And I know you're leaving in a couple of days, so really grateful that you were able to spend a little bit of time here on the show with us and share all the learnings that you've had over the course of your operator journey, investor journey, and now founder journey. And I wish you all the luck.
Yeah, thank you so much for having me. And I would actually encourage more venture professionals like us who to actually go to the other side of the table and build things. I think it's really important, I think, for the ecosystem at large to have this back and forth on both sides, right? Not just from founders becoming VCs, because it's very healthy, and the learning and that sharing of the journey. I'm sure my co-founders also appreciate the perspective I bring in as an investor, right? So I think it's important that we have a more round table than a rectangle where people are just sitting on the opposite sides.
Side.
Yeah,
I love it, and hopefully the next time I see you, you guys have done more than what we have, what we had planned out for, and hopefully, we might be one step closer to what we would be wanting to do on a lean perspective as well.
Yeah,
so
absolutely.
Thank you so much again.
Thank you so much for having me
on the show. Well, if you've made it this far, first of all, thank you so much. It really means a lot to me and my team. We spend countless number of hours producing, editing, and pushing this content out, and it really means a lot to have your support. You could have spent the last hour watching TV, Netflix, going out and playing something, or on your phone, but you chose to spend it with us here on this channel, and that means a lot to us. We put in a lot of effort and will continue to do so. So if you do have any feedback, please leave that in the comment section. And while you're at it, hit that like and subscribe button so that you don't miss out on any of our future episode releases. I hope you took something valuable away from this episode, and we have a great lineup of guests over the course of the next few months. So please make sure that you tune back in again, and I will see you on the flip side.